Are you ready to supercharge your wealth and unlock the power of passive income? Welcome to this episode of Dividend Discussion, where we embark on an enriching journey through the realm of dividend investing. Whether you're a seasoned pro or just starting out, this series is a gateway towards invaluable insights and firsthand experiences that will propel you towards financial independence. Join me as we dive deep into the minds of others in the dividend investing space that are eager to share their stories, mistakes, triumphs, and life-changing lessons. In each episode, we unlock the secrets of successful dividend investing, ensuring you can sidestep costly pitfalls and chart your own path towards financial freedom. Sit back, relax, and immerse yourself in this captivating episode of Dividend Discussion. Hello, and welcome to another episode of Dividend Discussion here on Dividend Obsession. I'm your humble host, Troy, and today I have the pleasure of speaking with the Dividend Dog from Twitter. Hey, if you wouldn't mind going ahead and giving yourself a brief introduction and telling the people who we have the pleasure of speaking with.
Thank you. Thank you. Good morning. Good morning, Troy. Thank you for having me on. As he mentioned, guys, I am the Dividend Dog. That's where you guys can find me on Twitter and on YouTube at Investing on a 9 to 5. That's where I go over YouTube and have my stocks there. But dividend investor for the past 3 years. I am 32 years old, just turned 32, and located here in Atlanta, Georgia.
Sweet. I
Happy to be
appreciate it.
here.
Yeah, nice intro there. Okay, so I mean, you kind of answered this first one a little bit. So when did you began your investing journey? You said so you began dividend investing 3 years ago. Did you begin your investing journey then? Like, did you jump right in with dividends, or how'd that get started?
No, so just to give you just a little rundown, so I do have went to school for business, and one thing that I remember in college is that one of my professors told us to, hey, make sure you guys take your company match when you sign up for your 401k.
Good.
So
That's a good
once I
professor.
got out of school, I started working at Enterprise Rent a Car. I worked there for about 5 years, but I had a 401k there, and I was doing the company match, and with my current company now, General Motors, I do the company match. And so, yeah, I've been investing just like through the 401k,
Mhm.
the past, 9 years of me working. But recently, the last 3 years, I've really taken my 9 to 5 money and really started flushing it into dividend paying companies.
So what caused you to go down the path of, like, was it did because this is
Something
kind of
happened.
yeah, like what happened to because nobody ever starts dividends on purpose. So like, how'd you go down the dividend path?
So I had a golden nugget given to me by my dad when I think we were like 15, 16 years old playing competitive baseball. Well, we were actually heading to the baseball field and we were watching, I think we were watching the news or seeing NBC back in that time. And he was like, son, you can have companies send you checks every month or whatever. And then you split those checks up and send it out to other companies and they'll send you money. And I was like, why would I do that? And they're like little pennies. He was like, well, over time they like add up. That I remember that part.
Wow.
And we went to the baseball field and boom, boom, boom. Well, back in 2020, I was, living way above my means. I was really buying sneakers a lot. And dude, I was out to dinner with my family and man, my car declined at dinner. Yeah, wake up
That's a
call,
bad
right?
feeling. Yeah.
Hey, wake up call, right? So so I got back home. I told my girlfriend, my wife now, I said, hey, that will never, ever, ever happen again. And the next day I was reading a book on how money works. And how I got that book is I was handed that book by a coworker that she was into investing, and she was like, hey, I'm starting to read this book. And boom. So I had it right there and I just started reading it there. I was like, dude, you're behind. And that's when I ordered the Intelligent Investor next, and then the Automatic Millionaire, and then dude, I got like 20 books in here now.
Yeah.
3 years later.
That's super cool.
Yeah.
It's so cool to hear. Like, everybody I've asked that question to, like, common theme is nobody ever starts with dividends, and like it's always cool to see how people move the investing field to get
Mhm.
to dividend. Like, for example, a really quick story, because I've told it before. Really quick story for mine is I started with Robinhood. I opened Robinhood back in like 2017. I was gonna buy, I don't know, let's just say Nike, because I always wear Nikes. And I was like, okay, I'm gonna buy Nike. And then I opened the app and I found out Nike was, I don't know, what, $120 a share. And I was like, man, I gotta spend 120 real dollars to get. I was like, that's too much. It was scary. I didn't want to do that. So
Likewise.
I closed the app. I was like, okay, I didn't know this was real money. It was scary. I didn't want to do it. And then COVID happened, and I started watching like a lot of like Andre Jick and Graham Stephan and like personal finance channels on YouTube. And
Hmm.
Andre was really big into dividends at the time. He doesn't talk about it now. He's a lot of fear stuff now, but So he was talking a lot about dividends, and I was like, okay, that's interesting. So I started doing that. I signed up for a new Robinhood account. I got a free stock. My free stock was SiriusXM, and
Hey,
SiriusXM paid a penny in dividends. And I remember I was out doing something, and my phone buzzed, and it said SiriusXM just paid you a penny in dividends. And I was like, why did they give me a penny and what's a dividend? And then that's literally how everything started. I was like, it's
there
so
you
cool to hear
go.
how people start with dividends. And like,
Mhm.
it's literally like, everybody says it in our space, the dividend snowball. It starts literally in my case with a penny, and then it's just gone from there. And it's so fun to like, I always stress the importance of tracking your progress because dividend investing doesn't happen tomorrow. Like you're not rich
No,
tomorrow. It's
no.
tracking your progress, looking at the percentages when the numbers are small. And then once the percentages get small, the numbers get big. And then the numbers are
That's
big
it.
and you're motivated by the numbers. So,
Yeah, dude. And to attest to that, guys, I started with $60, with my dividend portfolio, and
yep.
just like, and just grew it from there. I was just started to become smarter with my money. I worked harder at work, and I'm in a better position now to where I have a little, where I can invest a little bit more now. But that doesn't go to a test where don't be afraid to not start, at all.
Yeah. Yeah. I mean,
So,
it does, it's like
wow,
I've said this before
it
too. It's
grows.
like the first step's always the hardest. Like the first
Yeah.
anything's always the hard. The first step, like first opening the
Oh my
app,
god!
adding
I
your
remember
first
seeing my
dollar.
first like $500 in my Robinhood account. Like that was it. I think I had ET, VTI, MPW, AGNC. I think those were like my first like flushes that I really went into.
Yeah.
Then I was like, man, Apple's like $112. Microsoft is 200. I'm like, how? I'm like, how? And then I get on Twitter. I'm like, who's got 50 shares of this company? I'm
Yeah.
like, what?
Yeah. Well,
But I'm
the
like,
trick is
oh, this is
they had
long game.
50 shares of Apple when it was $25. That's the that's the trick. Yeah, there it is.
Yes. And I'm like, wait a minute. Then I start reading more
Yeah.
and, once again, engaging more with people on Twitter and getting on here and talking with individuals like yourself. And like, aha, this is how this
Mm-hmm.
works. This is all just the long game.
Yeah. Yeah. They
This
didn't
is
have
all
50
just,
shares when it was $200. They had 50 shares when
yeah,
it was
no, no, no.
$80. Yeah.
Yeah, this is just the long game.
Yeah.
So we just have to get yourselves in the game,
Yeah.
get your feet wet, and
It
then you'll sit pretty
at the
too.
end of the day, the reason that like dividend investing isn't attractive until people are making thousands of dollars a month for doing absolutely nothing, and it's not
Yes.
quick. But I've seen if you quote unquote right, if you do dividends quote unquote right, I haven't seen anybody like. Yeah, you might not like if the ultimate goal is to retire off of dividends. Like I've said this before, like my goal is to retire at 50. I'm 28. I have 22 years left. If pretend 22 years from now I fall short on my goal and I can't retire off of dividends and maybe I'm only making 40,000 a year instead of the 80, 90, 100 whatever I need. That's a part-time job that I don't have to work. Or in some
Yes.
cases that's some people's full-time job that I don't have to work.
Yeah.
So like it
That's
still
that.
helps. Like worst
It,
case scenario, imagine like shooting for what do they say? Shoot for the stars, land in the clouds kind of thing.
yeah, you aim for the moon, you land some on the
Yeah,
stars.
yeah, like it's fine. Like so, I mean,
Mhm.
like I said, I'm not selling my goal short. Like my goal is to be like, hey, I'm making 100 grand a year in dividends, and we're good. Like we're good off of that. But yeah, if I end up, I forgot to drag a decimal point or something, and then I'm making a lot less. It's still extra passive income, and that's the key. It's passive income. So
And the quicker you build that income up while you're young, I mean, 3 years into the game, I mean, not even to the game, 3 years, and yeah, 3 years into the game, my little portfolio is, it's almost close to 30,000 now, and it's just now starting to produce
mhm.
almost $100, monthly.
Yeah, yeah,
It's some
I
months
just
I'm
recently
doing
hit that
100,
point too.
150. So I'm just like,
Yeah,
all right, this
yeah,
is starting to. Because I remember when it was $10, then the
yep,
next month it'll be $2, then the next month it'll be three. I'm like,
yep,
but that just made me just want to continue to
yep.
add more, more, and more, and more. So it's like I feel like my income is not really true to what it's saying right now because I'm continuously buying,
Yep.
every week or bi-weekly. So it's like it really can't catch up to itself.
Yeah, and that's the cool thing. I just did an interview recently where the guy was talking about focusing on like the projected annual dividend income, how that like anytime you add something, that number just constantly goes up, and like it's
Dude,
almost like you're just trying to chase it or keep bumping it up. You're like, oh, now I'm up to $700 a year. Now I'm up to 730, or now I'm up to
That's
whatever.
that's the number that I'm chasing.
Yeah,
My portfolio value, that number goes up
yeah, 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 yeah.
all
Yep,
day, left, right. It goes. whichever way, but I know that income, that
Yep.
projected income. As soon as I put money in, I go check it out.
Yep. And then even better is when you get a raise. Like when you just get a random 10% raise, you're like, I didn't even put any money in and I got more money.
Perfect example. Vici.
Yep. Yep.
6.4 raise, I think on Friday.
Yep.
Yeah, Friday.
Yeah, so you gotta love that. Okay, so you mentioned some of your beginning stocks. Do you have any dividend mistakes that you've made over the course of time? And then more importantly than the mistake, what lesson did you learn from that mistake?
My biggest dividend mistake, I would say, would be yield chasing Zim, integrated shipping.
They had like a 55% yield at one point, right?
Yeah, I really got into chasing that, and really, I think I tricked myself into believing like, hey, you can use this dividend to go purchase other stocks. And then they cut the dividend, and then the stock started continuing to like trumble down. I'm just like, dude, never again.
Yep.
And that took a really big hit to my dividend income, honestly, guys. I think I was like $1,200, and it took me down to like 800.
Yeah.
So I was like, all right, I got to get it back over 1,000, at least by the end of the year. Because from when I was in Zim, I had a goal to be at 2,000 by the end of the year. Because I was like, dude, I'm just gonna keep buying ET, SCHD, and Zim. It's like perfect. Boom. Well, Zim just, like I said, I cut the legs from under me, but that didn't make me sad or anything that made me give up on dividend investing. That just makes me or made me build my portfolio even stronger.
Yep.
So I just want to pick up like some Apple, more ET, more Vici, and SCHD. Those are just like my main like core four that I'm like really pounding the pavement with. And if you own ET, SCHD, and Vici, you'll get a dividend every single month from those three. But yeah, that was probably my biggest mistake there, yield chasing.
Yeah, that's the common denominator, and I don't like to pick on that because like at the end of the day, so a lot of people will talk about they want to say, oh, I'm 54, I'm 33. Like at one point, your age doesn't matter in dividend investing. What really matters is how long your runway is. How long until you need the money? Because like if you said you're 32, right?
Yes, sir.
Yeah. So if you're 32 and your goal is to retire at 34, your portfolio is going to look a lot different than it's going to look if you're 32 and you plan to retire at 62.
Yep.
So like that's more important. So like yield chasing is bad in most cases as far as like what yield chasing is for anybody that might not know is just like basically the only thing you look at a stock is how high the dividend yield is. Like you don't look at, there's no other metrics you have one criteria. It's just, I want to find the biggest yield. I'm going to buy it because it's going to pay me the most money in returns. When in reality, you're not looking at the capital appreciation, or in this case, most cases, capital depreciation, and the fact that dividend's not supported. The only reason that the dividend yield's high is because their stock price keeps falling down. And then as their stock price falls, they don't have the cash flow to support their dividend, and their dividend's going to get cut too. So like you're really putting all your eggs in a basket that doesn't even have a bottom in it. You're just like, yeah, there goes my eggs.
Yep, and it's like just free falling, and then I mean, you hate to wake up and see that your company's cutting the dividend.
I've never had that before, and I don't ever want to experience that feeling.
Intel, but I have to say I was right on Intel because I agreed with the dividend cut. Yeah, guys on Twitter, they were like yarping at me, but they're like, yeah, they're gonna cut their dividend because they suck. I'm like, all right, Intel one doesn't suck. Look at the price from March of this year till now. Tell me if the stock sucks. And they're continuously to grow internationally, and they're not in that China mess like Apple is, right?
Yeah.
Boom. So they're staying clear of all of that going on, and the stock is still going up. And they're making semiconductor chips here at home. But that was my only like dividend cut that I had in my portfolio was Intel. But there was a reason why though, that they had to cut their dividend because they had to reinvest that money back into the company to grow. So like, and they cut salaries too. So a lot of stuff went into that. So it's not like we didn't see that coming. But for viewers out there, do not get into any companies that have these high payout ratios.
Yeah.
That, like we mentioned, that will cut the legs from under you, especially if you don't know what you're doing or if you don't know much about the company, which I always have a saying of know what you hold. Like if you know that they're going to cut their dividend and you want to still stay with them, that's by far go ahead and do that because we're long-term investors. If
Yeah.
you're going to, like we mentioned, if you're going to be investing for the next 30 years, dividend cut now, yeah, you might get a little scrape on your knees, put a band-aid on and spit on, you'll be all right. But if you're trying to retire the next 2 years, you probably don't want to be,
Yeah.
playing around with these companies like
Yep.
Intel, or in that type of nature if can stay away from it. So, like Tori mentioned, you have to, know what you hold and know where you are in your investment journey.
Yeah, yeah, that runway matters a lot. Because like
Yeah.
there's that, like, for me it doesn't make sense to change. Like my portfolio yield I think right now is 2.03 or something like that, but I have
Okay.
22 years. Like I have tons of time to. I'm just trying to grow the capital, and hopefully maybe my yield on cost for these positions will be a lot higher by the time I need it. And if it's
Yeah.
not, I can sell out of these positions and I can go to something that's yielding 4, 5, 6%, whatever I need.
And I guarantee your dividend growth is probably over 10%.
Oh yeah, my portfolio average for all 11 of my positions is 11% dividend growth.
Yeah, so you're higher than inflate, like you're being
Yeah,
inflated.
yeah. And that's one of my criteria. Is like one of
Mhm.
my. I have 3 criteria. I'm thinking about adding a fourth. One of my
Okay.
3 is a 3, 5, and 10 year dividend growth rate above 10%.
Yes,
So
sir.
like I'm just focused on that right now. Like I have Visa, I have Apple, I have Microsoft, I have Starbucks, Pool Corp, like stuff like that. That's just like
Mhm.
dividend growth machine. Like one, yeah, Pool Corp, one nobody ever talks about. That thing's dividend growth rate over like the last 10 years is like 18%. And that means that 18% per year over the last 10 years is what they average. Like they kill. It's an expensive stock. I think it's like 340 or something right now.
What's the tip?
POOL. One of my
Oh,
it's just one that it's pool supplies. They build swimming pools, all kinds of stuff, hot tubs, all stuff.
oh,
It's one of my favorite stocks. It just never no, I never see anybody on Twitter or anywhere else posting about it. It's just it
wow.
does its thing. It just grows and grows its dividend. I'm like, why not?
And these are boring companies.
Yeah,
It's a boring company. That's why
yeah. I
it
mean,
doesn't
people,
have
but
all
like,
the lights and glamour, and it
yeah,
doesn't.
when people get what they call rich, what's the first thing you do? I want a house with a pool. Well, here you go. Pool Corp's like the biggest distributor of pool supplies, cleaning material, like a whole 9 yards. Like they do that. That's what they do. So,
Wow.
and they do it for like, they don't just do it for residential either. They do it for commercial. So if there's, hotels go in, I don't know how many hotels don't have a pool. So unless you're going like Motel 8 or something, but like if you're going to a
Yeah,
pool
you're
that,
trying to stay. Hey, stay away from those, man. If
yeah,
you're
yeah,
going
if
to
you're
a
trying to go somewhere you won't get bed bugs, then you probably have a,
Airbnb,
yeah. So, I hope nobody from Motel 8's watching. But anyway, okay,
no, no.
so, in the last 3 years, how has your investing style changed from then to now?
Actually, I'm gonna actually pull up my portfolio and I'll tell you.
Because, like, I
Um,
mean, it sounds like you were, at least earlier in your journey, you were more of a yield person, which a lot of people are. It's just attractive. I remember backwards calculating dividend yield, where I didn't know what dividend yield meant. So I was like, okay, if I put
yeah,
$100 in this stock, how much is it going to give me? And it was like 7 cents. I was like, I want that 7 cents. That's pretty cool. Um,
yeah, no, no, no. When I first started, yes, yield chasing was my thing, but as you recall, my second book I started reading was the Intelligent Investor.
mhm.
And during that time, too, as I was reading The Intelligent Investor, AMC was making that run. People were buying all the calls. Shout out to Chris Johnson. When he bought the Lamborghini with the AMC option call, that was another green light for me to like, all right, options is going to be another thing down the line. But investing like this, long term, he always talk long term. I'm like, this is what you need to do. Bury your head in the books. That stuff there will come later down the line
Mhm.
if that comes down the line. But we got to learn this first. That's when I started learning about PE ratio, earnings per share, sales growth, dividend growth,
Mhm.
profit margins, and all that stuff. So and that's when I was born on the same day as Warren Buffett too, and Ted Williams, the baseball player. How crazy is
Look at that.
that?
You're
And
famous. You're famous by association.
dude,
Yeah,
I'm just like, all right, well, I tried to play baseball in college. That didn't work out to go pro. So let me go see if I can
I
invest
guess
in
I
it.
have to be a billionaire. I don't
I guess I have to be
know.
like Warren Buffett. I
Yeah.
guess. I
Yeah.
guess I was like, I guess you have to be like Warren Buffett. I'm kidding, but it's just funny that I noticed that. But I looked at his portfolio and I kind of just like I like companies that I saw,
Mhm.
like Walmart,
Yep.
Starbucks,
Procter and Gamble.
Procter Gamble,
Yep. Johnson and Johnson.
Johnson, Apple, Meta, and
Yep.
then I started looking at real estate. I like real estate. I'm like, but I can't go out and buy physical real estate. You can buy real estate in the stock market.
Mhm.
So I started reading the Intelligent REIT Investor during that time as well. So I started buying REITs like Vici, AMT, for the towers. I'm
Do you
like,
have
oh,
any realty income? Just curious.
I do not own realty income.
That I feel like anybody that has real estate has realty income, so that's pretty
I
surprising.
know, man. Everyone looks at me like, I'm like,
They're the
well,
monthly payer. You gotta own realty. Yeah.
no, but Vici's way better.
Yeah. I think if I had to pick between the two, I think I would pick Vici too.
Yeah, and dude, it's cheaper, man. I'm getting more bang for my buck.
Yeah. Yeah.
But no, more so back to like my investing journey to where I am now. I've had the same mindset, honestly. Just like buy boring companies and make sure you build that base of solid dividend paying companies and a solid dividend paying ETF, such as SCHD, or you can do VU or VYM, whichever one you want to do, or DGRO. But having like a good mixture of those companies, solid five, man,
Mhm.
you're good to go.
Yep.
You don't have to, if you have enough cash out there to go get 20 stocks, like some do, I'm getting close to that. Yeah, that's go ahead and do that. But like having like a solid core 4 or 5 stocks, man, a couple of solid companies and a couple of solid ETFs. I always had that mindset. I make sure I was diverse too. So real estate, energy, ETF, Apple,
Mhm.
tech company or something like that. And pharmaceutical. I used to own AbbVie. I owned AbbVie. AbbVie was another stock I picked up once I read a dividend growth investing book. So the more I read the books, the more I collaborated with people like yourself. It was more so I didn't get out of line to go down the crazy Yeah, I invested in QYLD for maybe like a couple months. I was like, dude, no, don't get out of that stuff.
Yeah.
Like you need dividend growth.
Yeah. Yep.
Everything I read was like
And
growth,
that's
growth,
going.
growth.
Yeah, that's going back to that runway we were talking about, because
Yeah,
QYLD might not be a bad option if you did want to retire in 2 years, but you don't want to
right.
retire in 2 years, so that's not a good option for you.
Yeah, yep. And so the more I read, and like I said, the more I read and continued to get myself out on Twitter and stuff like that, the more I became, more educated on like how to invest and smarter. But I feel like I still have the same type of, portfolio. I bought ET, that was like $9 when I first bought it.
Yeah,
So yeah.
that's pretty good.
Mhm.
Okay, so next question for you. What are your short-term goals with dividend investing, and then what are your long-term goals with dividend investing?
So short term,
Let's say within the next year.
okay, yeah, that's good. That's good. Let's say right now my dividend income is right over 1,023, and I would like to get that to 2,000 by the end of 2024. Like
Okay.
to have $2,000 income. By that
That would
time.
be for the year of 2024. You want to make 2,000 in dividends, right?
Yes, yep.
Okay.
So by the end of 2024, I would like that going into 2025
Okay.
with the 2,000 income. And long term, I would like to have at least 80,000 in dividend income by the time what is this, 2023? Given this, so 2020, no, 2055.
Okay. So you
2055.
have what's I was told there'd be no math. How many years is that?
That is that's 25 years.
There you go. Yeah. So you have,
Yeah.
yeah.
Yep,
Okay. So
24,
you
25
have a
years.
little bit longer of a. I just want to be retired. I don't know where I picked 50, but that's just the number I picked in my head. I want to retire at
Yeah,
50. So
I'm only giving myself, 55, 60 because I know the more I do research, it's like I hear like healthcare costs if you don't
yeah.
take it.
Yep.
If you get out before all that stuff kicks in, man, that gets so expensive before Social Security, blah blah blah.
Yeah.
And hey, even if we do get Social Security, that's extra cash
Yep.
flow that you can put in the stocks.
Yeah. That's exactly my approach is I want to be able to retire at 50 off of my brokerage account, my taxable brokerage account. And
Okay.
then that will take me till 59 and a half. And then at 50, I mean, obviously I'll be able to live off of it all the way to 59 and a half. That's the point. And that's the dividends, not the principal. I'm not withdrawing any of the actual funds.
Mm-hmm.
And then at 59 and a half, I get my Roth, my HSA, and my 401k. and then all those horsemen, combine, and then that'll take me till I'm gonna withdraw the latest I can for Social Security, which
Yeah.
I think is right now 67 might be the latest, because I think 62 is the earliest you can draw, and I think
Yeah,
67 is the
62 is the
latest.
earliest.
Yeah, so like at 67, I think you get 115%. So like if I don't need, so if I was already able from 50 to 59 and a half to live off that first income, and now I'm adding more with the HSA, 401k, and the Roth, I should be more than okay to make it from 59 and a half to 67 without
Right.
needing any of that money. And then when the Social Security comes in, I get an extra, like you're saying, extra fuel to the
Mhm.
fire, and I can just, I
Extra
don't need
food.
this. I can put it towards my dividends and make them grow even more. So, because
Yeah,
obviously
well,
inflation's
that's
going to
the
be a
point,
thing.
man.
Yeah.
At
So, I
that
mean,
point,
that's just the approach I've had in my head. Like I said, if at the end of the day it doesn't end up working out exactly like I thought, then it's nice to have 20, 30, 40,000 in dividends coming in every year. Like that's a
man,
cool
that's
backup
still
plan.
gonna be crazy
Yeah,
amount.
maybe
You know
that's
what?
my vacation plan every year. Like whatever I make in dividends, 10 grand in dividends, we go on a really nice vacation every year paid by dividends. Like maybe that's a thing.
And hey, let me tell you, I didn't have that as a kid growing up.
Yeah.
So it's like, hey,
Yeah, we're doing something. Yeah, we're doing something good.
hey,
So, and
heck
I
yeah.
have, like I said, I have my kid just turned 8 months. He's already on my credit card. As soon as I got his Social Security card, I added him to my credit card, which is something that you can do. Different not credit unions, different banks, have different requirements. For example, I have the Fidelity credit card. That one I
Dude,
called,
Fidelity's amazing.
do what?
Fidelity's amazing. I'm
Yeah,
sorry.
I that's my brokerage, and I have their credit card for the 2% cash back. It goes right into my brokerage, like all the things. Sponsor for Fidelity, not this video, but so I have that. I tried to call them. I got one answer of 13 and one answer of 16, so they're not on the same page. I'm sure it's not a question they get all the time. But then I called Capital One, that was my first credit card, was Capital One, and I said, hey, I have a newborn baby. I was like, I have his Social Security card. I was like, can I add him to any of my credit cards? And they said yes. So I was like, say less. So it's not a card I use often. I use it like once a year just to like make sure it doesn't close, because I use the Fidelity card for everything else. And like by
Yeah.
the time he's 18, he'll have 18 years worth of credit history, and that's very helpful because I don't have 18 years worth of credit history, and I'm 28. So,
Neither do I, man.
yeah, he'll kill it with that, and then he has his own investment account. So any money that he gets for birthday, Christmas, Easter, or whatever he gets money for,
Goes right into it.
yeah, put that in there, and then yeah.
Hey, generational wealth,
Yeah,
man. I
yeah.
love that.
If I'm not gonna live off of dividends, he's gonna live off of dividends. So somebody's
Oh,
living
man.
off of dividends.
Hey, you are too. Hey,
Yeah.
hey, somebody's going to.
Yeah. So I mean, he'll be retired at 35 and be like, "Look, Dad, I'm at 35 and retired." I'm like, "Yeah, you're welcome. Like, make sure you buy me something nice."
Hey, man, you know that's gonna feel so good.
Yeah, it'll be cool. Okay, so do you have any selling regrets or buying brag? So a stock that you bought really low that's done really well for you, or something that you did hold at one point, you sold it for whatever reason, and now you really wish you wouldn't have.
Selling regrets. Intel.
You sold?
Yeah, I
What
sold.
what caused you to sell?
That dividend cut. I mean, I was believing what management was saying, but then they didn't. They really they did. They said they weren't going to cut the dividend, so I'm like, all right, cool. I'm gonna continue to support you guys and say what I have to say online. But then they cut it, and then I'm like, all right. And then so I was just like, all right, I'm out.
You felt betrayed, so you got rid of them.
Yeah.
Yeah.
And then the stock tumbled. Then all of a sudden, man, this thing just Nvidia started the whole trend of the whole run.
I sold Nvidia. That's mine. I mean, at the end of the day, I made 55% profit on my position in Nvidia.
Oh yeah.
And I put it towards Costco, so I'm okay with it. Like I started a new, like we're good, but like literally, I think it was 4 days after I sold, they had their earnings and it went up 25% after hours, and then it hasn't went down since then. Like I think I sold at 330, and I don't know what it is now, like 4 something, high 400s.
Yeah, it's 4.9. Hold on.
I know they're getting close to 5.
Sometimes I go and check. Sometimes I go over the video and just test the water. I'm like, do I want to get in now?
Yeah. Well, the main reason I sold wasn't for like anything the company did or didn't do. It was just like
455.
Yeah. So like I sold at 330. So I had 11 shares, something like that. So I'd have made a lot more money. But at the end of the day, like my criteria is it has to outperform the S&P 500 over the last 10 years, which that one does. It has to have a dividend streak of paying and growing of at least 5 years, which that one does not. and it has to have a dividend growth 3, 5, and 10 over 10%, which when that one does not. So I was like,
No.
okay, like this might be a good company, but it doesn't fit the things that I'm going for, so I'm going to get rid of it. So that was the reason I sold, which that's why I'm okay with it. Like I made the decision, I made an executive decision based on the things that I want in my portfolio. I made a profit on it. I put it towards something that did meet, which was Costco.
Mm-hmm.
And then we're good. Like Costco meets all those criteria plus some, and it's a really good company, and it pays more than 4 cents a share in
It does.
dividends. So yeah,
It is a great company. It's always packed. I like it.
yeah. So and then so do you have any buying brags that you can remember?
ET.
I
That
don't
was
think I've
my
ever heard of ET. What is that?
so ET Energy Transfer. They own like oil, natural gas, and natural gas like liquids. They're based out in Dallas, Texas.
Okay.
They got over 100,000, I think like 110,000 miles of like underground like pipes and stuff
Oh, so
too.
they're like a pipeline play.
Yeah,
Okay.
yep, MLP. I got them at 9:45. I think end of 2020 when I first started investing. I was just on YouTube, just like checking out like oil and energy stocks, and this company came up, and they had just cut their dividend, and I started reading about it on Seeking Alpha, and then that's when Seeking Alpha analysis were like, yeah, this company's a buy after the
Yeah.
dividend cut. So I was like, all right, well, I wasn't in it for the dividend cut, so I was like, well, this looks good to me. And the management said they were going to continue to raise the dividend back to pre-COVID levels because they cut it because of COVID. So I'm
Yeah.
like, that's the reason why. You can't really
Yeah.
halt you against that one. No, got in, and eventually I just started buying like I don't know, I was buying like 20 shares, and I got over 400 shares. Now I'm trying to get to 500 by the end of the year. But yeah, I took it all the way from 9:45 up to what's 13 now. I'm up about 15% right now on the stock
Nice. That's pretty good.
over. Yeah, so it's that's my brag stock there right now.
I like it. And the cool thing about it is like me and you are about like the same years into our journey. So
Yeah,
like even our biggest wins aren't like huge percentages yet, but I'm looking forward to the point when we're 20 years into this thing and like our biggest wins like 1,000% up, and you're like, look at that
yeah,
thing.
yeah. That's and it's companies that we know that are going like we have. It takes energy to
Yeah.
move. It takes energy to turn lights on.
Yep.
It takes energy to power AI.
Yep.
So ET I feel is on a powerful streak right now, and I love the PE ratio. Dividend growth is good. It's a solid energy company for dirt cheap right now,
Yeah.
and pays a great dividend.
Yeah. That's good.
That's my favorite thing about it. If you really want, I mean, it's dirt cheap. It was paying me a good dividend. It was $8. I'm like, I'm doing the stock market. How much powder I'm buying. SCHD and VTI. This ET. Heck yeah. Why would
Yeah.
I buy go XOM? I'll go buy this thing.
Yeah. I like that. Okay. So, so this question's kind of twofold. So do you have any dividend milestones or achievements that you've recently achieved? If so, what are they? And then what role do those milestones and achievements play in helping keeping you motivated? Since we know dividend investing is such a long game, so like those are important.
Yeah. Hold on. Let me pull. I'm gonna pull up my dividend here on my phone. My dividend tracker. So recently with the dividend raise with Vici the this past week, they're now paying me 200 over 200 yearly now. So it's 204 now. It was 198. Now with that raise, I'm at
And
204.
that's with no money of yours. Yep.
I know that's not a lot of money, but that was like a huge motivator for me. Like, oh wow, this company is now paying me $200 a year. This
Yeah.
is Vegas,
Yeah.
this is casino, so this is awesome to see. Um, Now I just got over 500 annually with that one as well. So these two are really keeping me motivated. My next one that's going to motivate me, or that's motivating me right now, is to get 100 shares of SCHD.
Yep.
I'm at 75 right now, and then once I get over that, I'll be well over 200 yearly from just SCHD. So those are like my three right now that are motivating me to just continue to pound the movement, man.
Yeah.
Just keep going with it.
I think, like I said earlier, like that's the importance of like having some way to track your progress in dividend investing, just because it is such a long journey. So like at the end of the day, like you just have, you know, if you're doing something for a very extended period of time, like shorter, like longer than 5 years, 10 years, 20 years, like you need to find something that you can look to tell yourself that you're going in the right direction. And for
Yeah.
you, that's your projected annual dividend income from your whole portfolio. And then also you can drill it down to each position. Like, hey, I want to get to a point where each of my stocks is paying me $200 a year. And then I want to build it to where each of them are paying me $300 a year or whatever that might look like. Whether
Yeah.
it's a share count or the amount you have invested in it. So my dad was getting into investing at one point, and I told him he was trying to do it per share. Like he was trying to be like, I want 100 shares in each company. And I told him, I was like, well, that is a good idea. But I was like, the thing that might be a better idea would be to look at the value of each holding versus the number of shares. Because if you were to try to do that with, say, SCHD and ET, they are one completely different companies. One's an ETF and one's an energy company.
Mm-hmm.
And two, one costs $13 and one costs like $75.
Yep.
So to get 100 shares of 13, that's whatever that math turns out to. I'm not doing math.
Yeah.
And then 100 shares of one that costs, what's that, 7,500?
Yeah,
Completely different
7,500.
values in those
Completely
stocks.
different values.
Yeah, so I was like, it might be smarter to go, hey, I want to get $1,000 worth of all of my holdings before I start adding maybe another holding, or before I build them all up to 1,500 or 2,000 or whatever it might be. So it's just like I said, different ways to track your progress is very important when the game's as long as it is.
And sometimes I change it up too. So like once I get to 100 shares of SCHD or whatever, I love that ETF. It's got so much dividend growth, history, and the team over at Schwab, they do a really good job with it. And the companies that are in there are phenomenal. Their value, I feel value is going to really drive the market here soon. Value is going to have its day, and SCHD is going to take off. But in the meantime, this is a great time to accumulate, a lot of shares and just build that income up with this one. I mean, this is easy, $75, and you're getting the best companies out there in the market.
Mm-hmm.
And like you said, just keep it simple.
Yeah,
keep it simple and knowing what you're chasing out here. So
yeah, that's really good. So, in speaking about the runway that we've talked about and your goal, you said your goal was 80,000.
Yes.
Okay.
Yeah.
So, do you think? Because I know this is going to be an issue for me. Do you think?
No. My bad. 80 minimum, but I'm shooting for 100K.
Okay. So pretend you get to the point where you're 55 or 60, whatever you said you were going to retire at, and you see you're making 100K. Because of how dividends work, where you have the dividend snowball with the compounding, where like you might increase by $1,000 per year from year 10 to 11, but year 20 to 21, you might increase by $4,000 a year. When will you know enough is enough? And do you think you'll have a hard time pulling out of the dividend game and saying, hey, I reached my 100,000, like we're good? Cause like you could look at your numbers and like one more year, you can make 112,000.
Yeah. I'm going to have a hard time.
Yeah. I know I am too. That's why I asked
I'm
the question.
already calling it right now.
Yep. Yeah, it's just the compounding and like the magic of it. It's just like if I wait one more year, I can make $12,000 extra forever.
Yeah, and then you're gonna think in your head, man, all these days and nights we were sitting here just researching, and now in a year I can just make that all.
Yeah.
What?
Yeah, it's gonna be very difficult for me. So I don't ask. I don't know that anybody's going to cure me. Like, I don't want to put that pressure on anybody, but I just want to know how other people, I've gotten some really good responses on it. And some people have said the same thing as me. They're like, hey man, that's going to be hard.
Yeah.
Yeah. I don't know how I'm going to do it. Like, cause like at the end of the day, like it's not like, oh, if I wait one more year, I'm going to get an extra $500, which is something like we're doing right now. Like right now, if we go up $500 or $1,000, like that's really good for us. But like really when you're 20 years in, you can go up thousands of dollars, sometimes tens of thousands of dollars just in one year.
Imagine you got 30 grand or 50 grand or 70 grand and your company, Apple hands out a 10% raise.
Yeah. Like, what do you like? That's I don't know. It's just going to be hard. I know it's going to be hard for me. So I'm glad it's going to be hard for you too. So.
Oh yeah. I sit here and, think like, man, like what, just like, someone just got a 6% raise in Vici too, and they've got thousands of shares, like hundreds, millions. Like,
well, it's just like the people that own 1,000 shares of Costco, and I think it was like 2 or 3 years ago they paid a special dividend of like $5 or $7 per share.
Oh,
I'm like, what do
Yeah,
you imagine just getting a Christmas bonus of $7,000?
for doing
Yeah,
absolutely
for you don't
nothing.
even work there. Like you've never clocked in a day in your life, and you just got a Christmas
I
bonus.
think I may have gotten more free stuff.
Yeah, like that's wild. So, okay. So next question
Mhm.
is, you said that your philosophy hasn't changed a lot since you've started, but it sounds like it was pretty sound from the start because of like the books that you've read, and then the lessons
Yeah.
that your dad was giving you, stuff like that.
hmm
So, what specific criteria do you use when selecting your dividend stocks? And then, like, what role does that play in helping keeping you diversified? Do you care about diversification? How do you handle those things?
Yeah. So I have a kind of like a strict like evaluation, but I'm just pulling up my evaluation list here now. So when I go look at a company, let's just keep it very simple here. So when I go look at Apple, or you know what? Yeah, let's Apple dividend growth. Um, are they profitable? What's their evaluation? Are they growing? Can like can I see their product? Is it tangible, or is it something online? If it's online, who's their e-commerce? Is Amazon taking them out? Can Amazon buy that
Mm-hmm.
company? Like that's the type of things
So,
that
kind
I
of like
if
the moat.
yeah, if they're yes, there we go. Boom. If they're a moat. And then I look at, technicals, I look at their profit margins, like I said, they're profitable or not, and then can they sustain that dividend?
Mm-hmm.
So this is obviously the cream of
Payout
the crop
ratio.
here. So we look at the yield, payout ratio, and then that 5-year dividend growth rate. Now Apple, I don't think it's a dividend growth or a dividend company. It's more just a growth
Yeah,
company. I don't
yeah,
think
yeah.
why they put out the dividend, but whatever. But I look at that 5-year, and such as you say, you look at anything over 10%. I'm more so at least 5 to 6%, and
Mm-hmm.
then then 10%. If I can get that, heck yeah, that's even better. But PE ratio, price to earnings, compared to the S&P 500, right? So anything below or at 25, or the industry or below the industry, depending on what industry it's in. I look at their sales growth, earnings per share, and then their EBITDA growth, earnings before interest, taxes, deportization, and I can't remember the last one. But yeah, those are like the main things that I look at for just like long term. If I'm gonna look really good at a stock overnight, and making sure it's a good investment. Now, if I'm doing a quick investment, looking at a company, I look at their PEG ratio, which is their peg forward. And what that is, it shows like the price to earnings compared to like the earnings growth.
Mm.
It puts it in one number. And if it's at one or below, the company is considered really, really value compared to the price that it's at. So you're paying a good bang for your buck. And if it's at one or above, investors are expecting to pay a lot more for the earnings that are expected to come for that company. So normally, if you can find a good company, that's paying anything below that one for the PEG forward ratio, like Apple right now has a PEG forward of 4.3. Let's go look at Vici, and Vici has a 1.8
Mm-hmm.
PEG. So it's like Vici is a little bit more valuable because it's closer to one
Yeah.
than Apple is. Same reason off dividend. If you're going to talk growth wise, Amazon, I think Amazon's one of the best price is at zero point 0.7
Oh wow.
compared to Apple 4.3.
Wow.
And Amazon's way cheaper. You know what I'm saying? So Amazon's got a little bit more value behind it right now than what it's really showing for compared to Apple and compared to Vici too. So that's one little metric that I've like added in where it's kind of taken over to like one of my first ones that I look at to say, all right, let's see how valuable this company is. Where's the peg forward? If it's at one or below, all right, cool. I'm gonna go check out everything else. If
Yeah.
it's one or above, all
Well,
right, I know I
so
gotta.
I have a video that I put out a long time ago, talking about like how I filter for my dividend stocks, and obviously I talked about like my metrics and stuff. But
Uh-huh.
the ultimate goal of what you just basically explained is like you need to have one, in my opinion, having
Did that
one.
make sense? I'm sorry. I was just sitting here started
No, no, no,
babbling.
no, no, no. Yeah, it all made sense. But like, so the idea of what you're doing is smart because you have an initial filter, which obviously most of the time your initial filter, my initial filter is, does it pay a dividend? Like that's my initial filter, and then after that, like I'll add my three filters right away.
Mm-hmm.
And to me, your filters aren't good enough if when you get a list, so say you start with 10,000 stocks. I don't know how many stocks are in the market, but 10,000 stocks,
It's a
and you
lot.
filter for dividend payers. Maybe that knocks you down to 3,500. Cool. If you have like one or two other filters, like say you're filtering for stocks that yield above 10%, like you're yield chasing above 10%, and that's it. Like you
Mm-hmm.
probably are still going to be left with 200, 300 stocks out of that. I don't know if any of these numbers are true or not, but like that's still a lot. All this
Yeah.
to say, your filters are strict enough that you're not going to eliminate everything, but you should eliminate most. Like that's the point of
Most.
good filters. Is like if
Yes.
you run all these filters and you still have 80 stocks to look through, your filters aren't tight enough.
Mm-hmm. You got to
So,
tighten them. Just there's you got to add one little bit more, one more metric in there that's really gonna hone in and be like bring out that value in the estimate. So like 5 year earnings per share growth estimates, sales growth for next year, like things that are upcoming, for the company because you're investing not just for the next short term two to
yeah, you're
five
not buying
months,
what
you're
they did
investing for
yesterday. You're buying what they're doing
five,
tomorrow.
20
Yep.
years. What they're about to do, and there's analysts out here that are writing just for the next couple of years. Like
Yep.
they're doing that type of research, and that's what you have to do too if you're going to individually invest into these dividend paying companies because we want our money to come in and sleep well at night, swan. So you don't want to keep cheating. As we get older, we should be checking our portfolio less.
Yep.
Honestly, the older we get, I mean, yeah, we should do like our annual rebalance where it's like, hey, like this year here we're gonna be all focused income. All right, do a rebalance and then boom, boom, boom. The older I get, I mean, the less I'll be want to check my portfolio because I trust it.
Yeah.
I've
Yeah.
done
You've
all the
already
hard
done the
work.
work. Yep.
Yeah,
Yeah.
we've done all the work.
So what when you have those criteria that you select your stocks by, like how does diversification play in there? Like maybe you find a stock that has the peg ratio, the forward peg ratio of, below a 1, but it's in the energy sector and you either already have a lot of energy stocks or you're already really high weight in ET, or how does that work?
I gotta let it go. I'm not. I used to do. That's one thing I used to do. I used to have XLE, and then I tried to go get Chevron, and then I tried to own Shell and BP, and then still own ET at the same time. I'm like, wait a minute, you can't own like all of it. It's either you're gonna own an ETF or you're gonna own one company and you're gonna go all in. So like,
Okay.
and the more I look at ET's evaluation from the earnings, once again, listening to those calls, dividends continues to grow, price appreciation is following that. Target pricing are still at $14 to $17 here soon. So that's just making me continue to could stay committed to that company,
Yeah.
and not to get out of whim because that's just more extra shares you're gonna have to go accumulate more of. Because like I said, you can't just buy 5 shares and just be like, yeah, that's gonna be you can do that, but it's like I'm thinking like long term and
Yeah.
trying to get as much income as I can. You have to have your solid ones that you're gonna roll with in that sector. So not being too heavy in the sector, either own an ETF and one company in the sector and that's it. But like having 3, 4 companies in the same sector, I mean that's not too that's not smart on in my portfolio.
Yeah.
That wouldn't be smart.
Yeah, I like that. I always like hearing the diversification thing because like everybody that I've asked so far, they have completely different answers, which is really cool. Like I know I've
Yeah.
talked to somebody that has 80, 90 stocks. I've talked to people that have 4. I've talked
Yeah,
to people.
it's whatever floats the investor's boat. I mean, you can have those type of you can have that many in your portfolio, but that's what you have to keep up on.
Yep.
That's just everything that you have to keep up on. If you can keep up with on that, then that's awesome. There's no right or wrong way to invest. Or there's lots of wrong ways to
Yeah.
invest.
Yeah. Yeah.
But, like everyone has their own like way of investing. So
Yeah.
like every portfolio is not the same.
Yeah. I always try to say like, especially for people that are newer, like my idea is that investing is just a big game of opportunity cost. So I kind of like when you were like, oh, there's no right or wrong way. There's more or less just like a there's a way, there's a good way, there's a better way, there's a best way, and it's
Yeah,
also the way, good, better, best ways are all dependent on you, your timeline, your risk tolerance, like everything. So it molds to you. Like you're not just gonna go to a store and say I want that investment and like that fits for you. Like it might fit for you today, but it won't fit for you tomorrow, or it won't fit for you for 10 years, or maybe it doesn't. Like maybe it's too risky for you or not risky enough or whatever. So
yeah.
Yeah,
And
it's all opportunity cost at the end of the day. Yeah, I personally don't like these yield max funds that everybody's buying now because it's just propping up their income. And I'm like, okay, but like, when do you need the income? They're like, oh, I plan to retire in 30 years. I'm like, why do you care what you make today? Like, I don't care what you make today.
no one's looking. I don't know how many people are looking at the expense ratios.
Expense ratios are 0.99%, and they're
Point
losing
one.
value, and they're underperforming the stock that they're tracking. And like that's so like I posted it's my most popular video on my channel. I posted a video and this was me doing my research on yield max. I was like, hey, I know nothing about this. I hear a lot about it. Let me do some research. So I was like, okay, out of curiosity, like Tesla versus TSLY, like how does it compare? And TSLY with at the time 76% dividend yield or something is still underperforming Tesla with the dividends reinvested. So it would just be better to own Tesla. And they're like, oh, then they hit me with the argument, oh, but this is giving me cash flow now where Tesla's not, and I have to wait for Tesla to appreciate and then sell. I'm like, fair enough. What about Apple? Apple versus APLY. I was like, Apple with the dividends reinvested, which are very small, versus the big dividend yield and potential for capital appreciation of APLY, still underperforms Apple. And you're getting paid by Apple in the long haul anyway, because Apple pays a dividend and grows its price. So like, and I got a lot of comments on that one. I am looking at it right. I'm not looking at it right, whatever. So I have another video coming out on the channel soon where I'm like, okay, if you are going to invest in these income funds, are they even the best income funds or are they just the most popular? So it's kind of one of those things. I'm like, okay, TSLY versus the field. Is TSLY the best?
I haven't taken a look at those, man.
I mean, I think that they're valuable, but again, it determines your runway. If you are going to invest in TSLY or APLY or NVDY or whatever other one that they have, if you're investing in those and you have a year until you need the money, like that can be a great way of like, hey, I've already got all my capital appreciation. I sold out of NVIDIA because NVIDIA's made me thousands of % gain. And now I'm going to put that money in NVDY because it's covered call or TSLY. And I'm going to get a 70% dividend yield because I need the money tomorrow. Cool. That works. That's a good strategy.
That's what I'm gonna do. Like remember I said the annual when you're turning like you're 50 or whatever, you're like, all right, cool. I'm not like the young whippersnapper. I am, but I need some cash now.
Yeah.
So show me the money.
Yeah.
I'm gonna just go and get on these yields and I already have it. Take my growth from my growth portfolio. Shout out to Apple, Amazon. They're gonna be doing their things. Cash out there, boom.
Yeah, and then you're taking. Yeah, you can instantly like you're talking about getting a 10 or 12% dividend growth rate. Imagine going from a 4% yielder to an 80% yielder. Like there's your growth rate. Like that's how you do it.
Ooh.
You can go from making $1,000 a year in dividend income to $100,000 a year just by moving your capital. Like that's all it is.
Easy peasy.
Yeah, so I mean but like all that to say, like with those yield max funds, they're not right or wrong. They could be right or wrong based on how long you have left. But so many people are, our age or even younger, and they're like, oh, I'm already making $1,500 a year in dividends. I'm like, yeah, but you have 100% of that coming from TSLY, and you have a 30-year timeline. Like you're going to lose the original money you put in there is going to go down to half. And then your dividends keep going lower and lower every month because it's a covered call strategy, so it's hit or miss. And then, like, what are you going to do? Like, in 5 years, you're going to waste 5 years of time where you constantly see your dividends that you earn every month go down, 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 down instead of up, 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 up. And the capital that you put in there, you can't even take it out because it doesn't exist anymore. You put $1,000 in there, and now it's worth $350. So I don't know.
No, I feel you, dude. No, and that was one reason why I, to be honest, I haven't really taken a chance to get into them, just because it's the yields and
it's a great way to like make you feel good about your portfolio.
My experience, yes, that was my experience with Zim.
Yeah,
had the same experience with with the YLDs. That's what I was like. Oh, it just makes me feel good to look at my portfolio that's paying me $1,200 a year. But like, I know I need that dividend growth.
Yeah,
so it's like I need to just give it up and go get the real dividend growth.
Yeah. Do you want $1,200? Do you want $1,200 a year now, or do you want $1,200 every 2 weeks when you need it? Like that's. I mean, it's not, and you probably have more. It's probably $1,200 now every month, or you'll get $10,000 a month in 20 years when you need it. Like to me, that's a no-brainer, and it's not a both thing because you're gonna lose your principal. And you're not going to have the same amount of money. You're losing time. You have less time to let compounding work, like all these things. So, I mean, at the end of the day, I've never been like, I'm 28. I've never been 29 before. I've never been retired early before. I've never planned for the future before, like this far.
Right.
So like it's really like it is hard to step back and say, "Hey, what would my 40-year-old self want?" Cuz I've never been 40. So I get it. But like at the end of the day, like it's almost like when you walk into a house that's being built and they're like, "Hey, here's all the sticks, all the 2x4s. This is where your living room's going to be." I personally can't even view that. And it's weird that I'm a dividend investor and I can view that in my personal, like my financial life. But my
Right.
personal life, you walk in a house, they're like, "Yeah, your master bathroom's going to be here." I'm like, "Dude, I see stuff sticking out of the ground and some sticks." I'm like, "I don't see nothing." Like, I ain't getting a bath in there. So I don't know. It's really hard, but that's what you have to do in finances. You have to be able to walk into the blueprint and be like, "Okay, this is what I need, not now, but later." And if you can do that, you're going to be
Yep.
successful. So, okay. So just a couple more questions to end the interview for you. So, you being as big as you are on Twitter, do you have any dividend myths or misconceptions that you hear all the time or get commented on all the time that you would like to, take a chance to debunk? One, like for an example, one that I always hear is like dividend investing is like an old person's game. And I'm like, well, that's kind of on the contrary. Like
Yeah,
if you
I
start
mean
sooner, you're better.
that was another reason why I really started doing dividends and like showcasing my little amounts, just because that's the stigma around dividend, that it's an old person's game. You got to have a lot of money to start.
Mm-hmm.
You don't have to have a lot of money to start.
Yep.
Literally started my long term portfolio with $60. No, but you have to have like drive. You have to continue to just show up every single day. Like
Discipline.
it's more in the investor than it is into investing into dividends when it comes down to like dividend investing. It's
Yep.
more so how much drive do you have?
Yep.
Like you're gonna tell yourself you're gonna work 25 years anyway. You
Yeah.
don't, unless you have 100 grand in your pocket, you're gonna work the next 25 years.
Yeah.
That's the realization that I came down to when I started looking at this. I'm like, you can take $100 and turn it into 1,000, chasing option calls and deal with that roller coaster of a ride, and you're gonna lose a lot before you learn the game there. Or you can just take it however you want to do it every 2 weeks. That's why, with investing on a 9 to 5, we go over just, I really talk about how to invest with your money every 2 weeks. Take a couple $100 or $50 here, invest it in these low costing ETFs or low costing stocks such as ET, right? You get paid off of it, right? But then what it does is, like I said, it's going to make the drive of you as the investor to continue to add it on.
Yeah.
I've implemented this thing called the dividend dog match, or the dog match strategy, right? So what that is every time I get a dividend, I would match that dividend and
So
take
you
it
put
on.
that back in the same company, or is that just like, so
Yes,
say you get $10 from ET,
ET.
you're
Yeah,
gonna
I
put
was
$10 in plus that, so
ET
you're gonna put 20 into ET.
for 20 ET,
Okay, that's pretty cool.
and I was doing that consistently. Same with SCHD.
Hey,
And I
that's
just
gonna get expensive pretty soon.
I know. It's already at 100. What, like my last one was like $120, so I put $120 in. Now it's 220 now,
Yeah.
and just in in little 3 years now, little ETs now we're putting 220 back into it.
Yeah.
So yeah, I mean, yeah, it starts small, but like you pick your favorite core four and just go right after it, and you get your evaluations, and you believe in those companies. Yes, you can build that and make it fun. So it's like dividend investing is fun because, like I said, you see the companies, you're watching TV, you pick up your Apple phone, you use Amazon every day, you go
Yeah.
to CVS, you use Starbucks. So invest in companies that you like.
Yeah.
And make it fun. Like, or you can invest in the companies that no one ever heard of, or no one ever heard of, like Pool Corp.
Yep.
Yeah,
Yeah. Ones that like maybe you don't use, but everybody else does. Like I don't drink coffee, but I have Starbucks because I know the cult following for Starbucks. Yeah, people gotta have their Starbucks. Yep, that's what it is.
Hey, I go. My wife asked me this morning if I use my Starbucks like rewards points. I say, no, I don't even have the app downloaded on my phone. I got the stocks, baby.
Yeah. Hey, I appreciate your customer. You're a great customer. I appreciate it.
Heck yeah. But yeah, it's a long game, but it's enjoyable, and you get to see your money make money every single day or every single quarter. So yeah, once you set a strategy and surround yourself with others like myself and Troy, And if you have to separate yourself from your friends or family, you got to do this. That's what you got to do. That's like the toughest part there,
Mm-hmm.
of like putting the time into it and trying to explain to your friends and family, hey, this is the dividends, and like they're like, you show someone else that you got 25 cents or $2 from a company, you're
Nobody
like,
cares. Yeah.
yeah, nobody cares. So it's that right there was a lot of stigmas too, where you see someone buying option calls and they just made 200% on a
Yep.
call, and now that feels a little bit more. That feels better.
Yeah.
They both should feel better at the same time, but that's my reason behind like pushing the drive on Twitter and hosting podcasts like this, man. Just to pop that bubble that dividend investing is boring. It's fun, man.
Yeah, I agree with everything you just said. I do think I'm curious in like 4 years if you're going to be able to do that dog match. That's going to get expensive. You're going to get $1,000 from ET. Then what?
Dude, I don't know, man. Dude, that's gonna be funny.
It might have to be like the puppy match where like they put 1,000, you put like a quarter of that in there. Like I'll put 250.
Yeah, we'll do 100.
Yeah,
There,
yeah,
you guys do the rest.
yeah,
But
yeah.
hey, that will be a good thing to have, right?
That's a good problem to have. Yeah, I can't afford to put as much money as you're giving me. Like you're giving me
Oh
too
man,
much.
I'm
Yeah.
sorry, guys.
Yeah, that's imagine like your employer when you're bringing this full circle when you were talking about your employer match. Imagine if it was like, we'll give you like you give us 1% and we'll give you 10. Like that would be a great match. That never happens that way.
No,
It's always like you give us 6, we'll give you 3. Like I'm like, all right, I guess.
It'll happen. Same with you and Costco, man. Dude, Costco's a crazy dividend.
Yeah,
That's one stock I wish I owned.
yeah. Well,
That and
and
McDonald's.
so I mean, we never got to that, but like one of my things is, and like why I don't like super care about evaluation so much is because my time frame's so long. Is like I've seen people like I'm a bigger presence on Facebook than I am on Twitter or X or whatever we're calling it.
Dude,
And I've seen
I got some stuff on Facebook. I got investing on 9 to 5 on Facebook. We got to follow.
yeah. Hit me up. I mean I'm on my Troy Marsh Facebook account as my I do have a Dividend Obsession Facebook account too,
Okay.
but I just post the video and then go about my day. But there's
Okay.
all kinds of dividend groups. Like that's the favorite part on Facebook now is just the groups. Like I don't really do all the other stuff, but the groups on Facebook are really good.
Okay.
But there's a big one on there called Dividend Growth Investing, and like the cover or the picture of it is like the Monopoly card. I think it's like a chance card where it says the bank paid you $50 in dividends, and that's the profile picture. And like that was just like little seeds that were planted in our heads years ago when we played Monopoly. I picked that card. I'm like, cool, $50. Never even understood what a dividend was or nothing. But like now, that's what I do. It's pretty crazy. So I don't remember where I was going with that. But anyway, so last question for you. And then you can plug everything that you need to plug too, and I'll put the links in the description, all kinds of stuff. So, if somebody's watching today's interview, and we convince them to not only start investing but start with dividend investing, what tips do you have for them? So it can't be just get started; they've already checked that off. It can't be do dividends because they've already checked that off. What else do you got?
To get started, consistency.
Okay.
Consistency. Not it's yeah, you're right. Besides getting started, it's the like when you're outside world, sometimes like I don't know, sometimes things get tight in your outside world. You gotta make a decision. Like, what am I gonna do this for? Am I gonna invest or am I gonna be eating ramen or sometimes it's like, do I invest it all and just say, hey, the hell to the fuck with it?
Yeah. Yeah.
So like sometimes it'll come down to it, man, and like you have to think like, all right, the sacrifices that I've made, and then like you're gonna have to make sacrifices in the future, like you're gonna have to want it more. Like your portfolio is gonna need more from you down the line, so you're gonna have to think like, all right, am I gonna have to work harder at work to increase my income, or am I gonna have to find another type of source of income to fund my dividend growth? Because eventually, it's gonna take off, and you're gonna be like, all right, now I need to find some more income, because that's where I kind of had my little I had a little issue too, where I'm like, all right, dude, this thing's about to get ready to continue to go. We need to find somewhere to make some more income. So we gotta like, how are we gonna do this at work? So speaking to that, it's just like, yeah, consistency. Gotta stay consistent either bi-weekly or every Monday, or you do it on the dividend day where you're getting paid those dividend days. So therefore you're not watching the market every single day, because that is not healthy. Yeah, and don't watch the market every single day if you want to. Like, you don't have to. Like, we just do it just because this is I'm sorry, I'd be nerding out over stocks.
Oh yeah, I invest every day, but it's just because I couldn't time the market. So I was just like, I got tired of buying on green days and then never having money on red days. So I was like, I'm just gonna put a little bit in every day. I don't look at the
Mhm.
stock price though. It's just like, oh, cool, I'm buying Apple today. It's cheaper than it was yesterday. Great for me.
Yeah.
Um,
Yeah. Yep. I
but
mean, it's cheap.
like you mentioned that earlier, and I thought that was really really cool. Is like with if you're just a growth investor, looking at the fluctuations of the market, that's the only thing you have that is what you're focused on. Because at the end of the day, as a growth investor, you need your money that you used to put in to be worth more than it is now, because that's the beginning and end game. With dividend
You
investing, obviously we want in the long term. I want Apple. I bought it at $100 a share. I want it to be $300 a share. Like that's great. But in the meantime, especially if you pick quality companies, you're gonna get paid to wait. And if you
Mhm.
can focus on numbers like you were talking about earlier with the projected annual dividend income, and you can
Yes.
just keep pushing that up, you don't need to worry about the emotions of the stock market that everybody else goes through with the reds and
Nope.
green days. You don't worry about that. You're just like, ooh, I put $15 in today. Now I made an extra 65 cents in dividends. Great. And then do it again tomorrow and then keep going.
Yeah, and sometimes you'll make even more because your company may increase that
Yep.
dividend at any given day, and the safest dividend is the one that was just raised.
Yep.
So shout out to Team Vici out there.
Yeah, I like that quote. That's gonna
Yeah.
be your header or your thumbnail on the video. I always pick a quote for the people that I did. So
Hey, let's
the
go.
safest dividend is the one that was just raised. I like that.
Yeah, man. I mean, and like I really think it is because that means that company has everything clicking for them.
Yep.
I mean, they have enough money going back to the investors. Payout ratio is good. They're growing earnings, so everything's rolling smooth. So that's always a good sign there, especially when it's beating inflation at the same time too.
Yeah, I like that a lot. That's okay. So with that being said, I want to say thank you to the Dividend Dog from Twitter for taking time out of his weekend to spend with us. And if you have
Yeah,
anything to plug, yeah, go ahead and plug all your stuff right here. We'll put it in the description.
for sure. Well, thank you again, Troy, for having me on your show today, man. Enjoyed talking with you today. Obviously, we had talked some powerlifting earlier.
Yeah.
We'll have a separate powerlifting podcast
Yeah,
out
yeah,
later.
yeah. Stay tuned for powerlifting obsession or something. I don't know.
Powerlifting obsession with
Yeah, I don't know.
stocks.
Yeah,
Powerlifting stocks.
yeah.
But yeah, enjoy talking stocks with you, man. Getting to know you too as well. I look forward to having you on our podcast as well to talk some more stocks. And where you guys can find me, the Dividend Dog on Twitter and on YouTube. I'm the Investing on a 9 to 5 YouTube channel. That's the name of it. And we also have a podcast on all streaming platform called the Investing on a 9 to 5. That's where you guys can find me at. Shoot me a message or at me. I'm always, interested to do any type of conversations on Twitter and messages and stuff. So hit me up, guys. I'm always open. Thank you again, Troy.
And that concludes another insightful episode of Dividend Discussion. I hope you found inspiration and valuable takeaways from our engaging conversation. If you're hungry for more dividend investing wisdom, be sure to subscribe to Dividend Obsession and hit that notification bell to stay up to date with my latest interviews, tips, and strategies. Remember, the journey to financial independence is a marathon, not a sprint. Keep applying the lessons you've learned and stay committed to growing your wealth using dividends. Together, we can create a community of dividend investors sharing knowledge and supporting one another. If you enjoyed this episode, don't hesitate to share it with other investors that are equally passionate about the power of dividends. Let's spread our dividend obsession far and wide. But until next time, see you.